Domestic equities fell more than 2% on Monday, capping their steepest monthly decline since the COVID pandemic-led rout of March 2020, as escalating war in West Asia drove a sharp rise in crude oil prices and darkened the outlook for India's growth and inflation. Brent crude was on course for a record monthly gain after Yemeni Houthi forces launched attacks on Israel, broadening the U.S.-Israel conflict with Iran. The Sensex dropped 2.22%, or 1,636 points, to close at 71,948, its lowest level since February 14, 2024. The Nifty 50 fell 2.14%, or 488 points, to 22,331, its weakest since April 7, 2025. Both indices have declined by more than 11% over March. The broader market saw a sharp erosion in investor wealth, with the total market capitalization of BSE-listed companies shrinking by $51.1 trillion during the month, to $412.2 trillion. The latest sell-off was triggered by a renewed escalation in West Asia, after the Houthis fired missiles at Israel over the weekend, and said they would continue operations until attacks on Iran and its proxy militant groups cease, heightening fears of prolonged disruption to global energy supplies. Brent crude briefly rose above $116 a barrel, intensifying concerns for India, one of the world's largest oil importers. Adding to uncertainty, U.S. President Donald Trump issued another warning to Iran on Monday to open the Strait of Hormuz or risk U.S. attacks on its oil wells and power plants. Tehran, on the other hand, described U.S. peace proposals as unrealistic and fired waves of missiles at Israel. Foreign portfolio investors remained heavy sellers, withdrawing more than $1.112 trillion over the month, the largest monthly outflow on record in rupee terms, surpassing the previous high of 91,983 crore in October 2024. The scale of outflows ranks among the highest globally. Investor sentiment, both foreign and domestic, was further weighed by tightening financial conditions. The rupee breached 95 to the dollar during intraday trade. Meanwhile, the yield on the 10-year government bond breached 7%, its highest level in nearly 2 years. Selling pressure was broad-based, with all sectoral indices ending Monday's session and the month in negative territory. Mid- and small-cap indices fell 2.7% on Monday and have declined by more than 10% each over March. Following the sharp correction, valuations have moderated, though analysts say the trajectory for equities will hinge on developments in West Asia. The Nifty 50 is now trading at roughly 17 times one-year forward earnings, about 13% below its 5-year average of 19.6 times. Saharsh Kumar, an equity strategist at Elara Capital, said the market appears to be approaching a support zone. At around 17.3 times one-year forward earnings, the Nifty 50 is trading below its long-term average, placing it in a zone that has historically seen rebounds, barring extreme disruptions. Caution, however, persists. Sailesh Rajban, Chief Investment Officer for Equities at Nippon India Mutual Fund, said the duration of the crisis would be critical. Domestic equities